Swing trading is a trading style that attempts to capture gains in any financial instrument over a period of a few days, more than one day, to several weeks. Swing traders primarily work on 4-hour or H4 and daily or D1 charts, and they may use a combination of fundamental analysis and technical analysis to guide their decisions. There's really no best chart time frame for swing trading because traders can use any chart time frame to analyze the market. However, 4-hour, H4 time frame and daily chart are the most used in swing trading technical analysis.
Hello, this is Igor from FX Igor YouTube channel, and today we're talking about swing trading. So let me repeat again definition of swing trading. Swing trading is a trading style that attempts to capture gains in any financial instrument over a period of few days to several weeks. Is the first fact. And another fact is that the swing traders primarily work on 4-hour and daily charts, and they may use a combination of fundamental analysis and technical analysis to guide their decisions. But the very important thing that the swing trading definition is not definition from fundamental science, from chemistry or physics or something like that, because there is several interpretations. Why? I will give you just one example. I was working in one company, prop company, and for example, they trade long-term trades more than 1 year. And when we talk about swing trading, they talk about swing trading as a trades that just keep 1, 2, 3 months. And for some other short-term traders, if they keep trades, for example, 1 week or few days, for them it's a swing trade. And if they keep trade 1 month, it is long-term trade for them. So there is no such a strict rule what is the long-term trade and what is the short-term trade and what is the swing trade that we can exactly repeat and tell, oh, this is it. No, there's no such a definition. But majority of traders right now, retail traders, we see that a swing trading is a period of few days to several weeks. So this is about definition. Let me see some examples of swing trading. Before that, before any example, I want to create one disclaimer. First, I want to tell you that a lot of YouTubers on YouTube talk about high accurate systems, about swing trading systems with accuracy of 80%, 90%, and so on and so on. First, I want to tell you that whenever you style you use, even short-term trading, swing trading, long-term trading, and so on, there is no system that can give you 80, 90% of accuracy, something like that. First of all, you need to understand that any kind of pattern that you know, any kind of system that you have, if you use machine learning methods and if you just create 100,000 examples and try to do some kind of classification, it will be bullish or bearish, or it will be profitable trade or not profitable trade, you will see on the end that your accuracy can be just few percents above 50%, and it is the highest accuracy that you can create as a machine learning expert or as a quantitative trading expert. Of course, if you take 1, 2, 3 years and make analysis, you can create 90% system. But a long run, if you just using some kind of machine learning, testing, and so on, you will see that it's impossible to have such a good returns. So I just want to tell you that you need to watch all that videos, even my video, any video on YouTube or anywhere, with some kind of reserve, and to understand that trading can be very difficult. It's not simple thing, and you need to use a lot of analysis, You use a technical and fundamental analysis, pattern analysis, to think a lot, to watch news, to research a lot, to trade not too often, and only that, maybe you can have good, excellent profit factor, or to be good trader, as we can say. But never some trader that has 100% accuracy, or every single year he is profitable because he knows secret sauce, some special secrets and so on. There's no secrets here. This is just analysis. We try to predict where the market will go, but it's very tough. A lot of investors and professional traders will tell you that's almost impossible to predict the market. But quantitative traders and traders that like to use neural networks, machine learning, and so on, they think it's possible to predict the market, but of course with some low moderate accuracy. So let me go now from this chart. This is the euro-dollar chart, and I just want to tell you that one of the swing trading strategies can be using trend lines, and to try to create buy or sell trades based on the overall trend, to try to buy from the bottom, to try to use some spikes, but to follow the main trend line. Another swing trading opportunity can be trend lines, but on the daily chart, where we can see some strong bearish or bullish trend or some pattern on the long scale, and then to enter into swing trades just a couple days to see what will happen. For example, a couple days ago, or maybe 24 April this year, you can enter into, as you can see, 1.21 price, and to try to sell here to create one short trade for euro dollar. But as you can see, you can put very tight stop loss, maybe half daily average range, maybe 50 pips around, something like that, and to try to achieve some better profit or risk reward ratio, and to create some profitable trade. Of course, this strategy is not sure. We see, for example, on daily chart, we see, for example, a bearish trend. But if we go on a 4-hour chart, euro dollar, as you can see, it's a bullish trend. So somebody will see euro dollar as a bullish rising trend, but someone will see as a bearish trend. Someone will buy right now, someone will sell. Maybe the both of them will be profitable, maybe both of them will lose money, but we cannot know what will happen in the future for sure. Anyway, traders can use any kind of time frames and create strategies, but they need to be nimble, so they need to be prepared to exit trade if it touch some important price level. For example, right now you can see the price 1.21. If we see daily close above this level, there is a strong probability that euro dollar can go bullish, more bullish and so on. However, as you can see on the chart, maybe this is the moment of the top price, and maybe we can see next days some kind of correction for euro dollar. It's very hard to know what will happen. Let me go another chart. Some traders like to use Fibonacci levels. As you can see right now on British pound US dollar, we are on the price around 1.387, and it's about 38.2 fib level, and the price oscillates around this level. As you can see, 61.8 line is very strong support, And maybe some traders which try to buy British pound dollar looking on a 4-hour chart. But if you just go to the daily chart right now, like this, you can see that maybe as same as euro dollar, this is the moment when British pound dollar will go down. We don't know that. You can just watch from several angles, and someone will see short opportunity, someone will see buy opportunity. There's no rule for this. You just need to monitor the news, you need to monitor the chart, you need to create the plans, scenarios, and we will see what will happen. Except this, in swing trading, we can use Fibonacci levels on the long-term time frame trades, like daily time frame or weekly time frame. As now, as you can see, we have a high from the March 2018 and the low from the May 2020. If we watch Fibonacci levels, we can see that on Euro Japanese yen chart, we just broke 61.8. There is a high probability that Euro Japanese yen can go up and up to 137.5. So we will have few resistance. As you can see, there is a high from the September 2018. It's a potential resistance there. It's a $143 price. But nevertheless, we just need to understand that our point of view is different based on the time frame that we use. Then, now we can use the patterns. In my company, we have a lot of pre-made indicators. One of them is this that you can just see on the chart. As you can see, we monitor volatility, trend, moving average trends. We monitor spikes. It's a strong movement in the moment. Then we watch divergence, double top, inside bar, sandwich pattern, megaphone pattern, and so on and so on. It's just a few indicators that we use. This is pre-made indicators that we use, but nevertheless, you can use your own. Pattern analysis are excellent to see the market, to see some interesting bullish or bearish setups. As you can see right now, if you just go a little like this, go to the daily chart, you can see that we currently have very strong bearish trend for US dollar CAD, and you can see that our patterns are moderately good, maybe 60% accuracy sometimes. Of course, if I test any single of these indicators 20, 30, 40 years in the back, accuracy will be just above 50%. So there's no high accurate indicator that you can use and tell, oh, this is this secret sauce, this is the special indicator, using this I will be rich, and so on. No, there's no such a thing. Indicators and everything that we can create are just little help to see something, but decisions when we will close our trade, when we'll enter into trade, that kind of decisions are most important, and it's very hard to trade just automated without thinking today. Very hard. Now we can use pivot levels, of course. For example, if we watch British pound CAD, we can see that right now we're oscillating around support. But what is the very important thing? It's a pivot point. As you can see, the price 1.723, we have a pivot, and you can see that price today, it was on the support and touch the pivot level to the pip. Can you see this? To the pip, exactly touch in a few seconds the pivot point, and then price went down to the support level again. As you can see, the pivot levels, it's not accident. You just touch the pivot level. That pivot level we calculated after the midnight. So we knew that and created a trade and tried to sell on the pivot. It's a most beautiful thing for trader when you create a trade, make a sell trade, and realized that your entry point for sell trade was the highest point of the day. So my trade didn't have any kind of drawdown in any kind of moment. It's remarkable. But this is the sign that calculating the price levels, resistance, supports, pivot levels, Fibonacci levels, any kind of levels, and use that levels to enter and exit from the trade, even from a swing trade, are excellent strategy for any kind of trader. And for the end, sometimes we like to use, of course, our pre-made indicators. One of them is this indicator that monitor trend and divergence, but the most important thing is to monitor pivot area. So in my personal opinion, pivot point is not just a line, a price level. Pivot point has pivot area. It's an area around the pivot point, and sometimes we need to watch whole area before we make decision. As you can see on the chart, there is a blue rectangle. Blue rectangle is a rectangle that automated calculate pivot area. And right now, as you can see, for British pound, Aussie dollar, it's some kind of a support. So if I decide to go, for example, bullish on British pound, Aussie dollar, I would try to put stop loss below the blue rectangle, for example, 1.784. Why? Because you need to watch a little bit wide, because sometimes the price will, like traders say, wash up. It's a strong moment, price break some price level in few seconds, in 1-2 minutes, and then goes up or down. And you see your wash up, your trade is closed, you didn't create a profit, and on the other side, market went in your direction that you wanted to go. Do you understand that? For example, right now, I can calculate the pivot point, and pivot point will be 1.787. For example, it's around, I will just show you. So pivot level is around this price level, by horizontal line. And the price can move very short time below this line and very fast to go up, and go up. And you will lose your trade because your stop loss was tight, was directly around some price level. In this case, we try to give the price to breathe some space. We give, for example, a little bit wider stop loss opportunity, and then in this case we have a little more, just better profitable ratio. We have more profitable trades than usually. So this is just suggestion, an idea. This was example, and all these examples just show how various people use various strategies. Swing trading can be used in various ways, using a lot of indicators, support, resistance, trend lines, pivot points, pattern analysis. You can use in various things. Of course, the most important thing is to know that you need to make research, you need to make some kind of analysis, you need to create scenarios, for example, for exit, to enter what will happen if price go there or there, what will I do if price goes here, and so on and so on. Just you need to have a plan for everything, your exit strategy, your enter strategy. And in this case, if you use that kind of strategy, you will be a little bit profitable, but it's not guaranteed. Trading is a tricky, of course, when you try to predict market in this way like we do. Of course, if you're a long-term trader and you buy a stock or something like that, it's a different story and different way of trading. However, this was the video regarding to swing trading, and I wish you good day. Bye bye.